Malaysia's economy is in dangerous territory.
Positivity and confidence.
In terms of growth, but also inflation.
Assalamualaikum and good evening to Miss Nur Haslinda and everyone. We are from Group BA273 1A. We'll present about exchange rate in South Africa from 2018 to 2024. Our group member are Nur Hidayah binti Masabri, Nur Fadilah binti Kutib, Siti Nur Hidayah binti Abdul Hamid, and Nurul Hamizah binti Rahani. In this presentation, we will explain several key points about South Africa exchange rate. Firstly, we will define what an exchange rate is. Next, we will give a brief overview of South Africa economic history. Then we will look at the average rate trend from 2018 to 2024. After that, we will discuss issues related to the exchange rate and its impact on South Africa. We will also explore the policies that address these issues. And finally, we will end with a conclusion followed by a reference.
First, I will explain about exchange rate. An exchange rate is the rate at which one currency can be exchanged for another between country or economic zones. It is used to determine the value of various currency in relation to each other, and it important in determining trade and capital flow dynamics. We choose the country is South Africa. South Africa currency is called South Africa Rand. Here, the example of exchange rate. Malaysia to South Africa, 1 Malaysian ringgit equal 4.11 ZAR.
For South Africa economic history, I would like to highlight the economy performance sums of Africa leading economies. In 2024, South Africa GDP reached over 373 billion US dollars, making it the largest economy on the continent. Egypt followed closely with a GDP of around 347.6 billion US dollars, securing the second spot. Algeria came in third with a GDP 266.8 billion US dollars. These countries are not only leading in Africa but are also recognized among the fastest growing economies worldwide. Their growth reflects Africa's increasing influence on the global economic stage. Next, the outlook for inflation over the next few years. Headline inflation is projected to moderate from 6% in 2023 to 4.9% in 2024. And further to 4.6% in 2025. This improvement is largely due to expected declines in food and fuel inflation. However, in 2023, food inflation slowed less than anticipated, driven by power cuts and the depreciation of the rand, which kept imported foods costs high. An avian influenza outbreak also contributed to the rise in poultry and egg prices. Fortunately, these pressures are expected to ease over the medium term. Overall, both the economic growth of these leading African nations and the inflation outlook show promising signs for the future.
Next is the exchange rate for South Africa in 2018 until 2023. The graph shows that South Africa Rand ZAR compared to Malaysia Ringgit MYR. First, for the South Africa in 2018, the exchange rate started with 3.5 Malaysia Ringgit per South Africa Rand. Then in 2019, the ZAR weakened further, averaging around 4.1 Malaysia Ringgit. In 2020, the COVID-19 pandemic severely impacted global currencies, including the ZAR. At the peak of the pandemic, ZAR started low as 4.2 Malaysia Ringgit. Then in 2021, the recovery pace post-pandemic saw the ZAR improve slightly but still low and reaching a range of 3.9 Malaysia Ringgit. In 2022, the ZAR weakened again due to global inflation, Rising the interest rate and South Africa internet challenge, the exchange rate averaged around 4.2 Malaysian ringgit. And last, in 2023, SAR continued weakening and reached around 4.4 Malaysian ringgit. Next is for Malaysia. In 2018, the year began with the ringgit around 3.9 Malaysian ringgit and fluctuated close to this level through the year. Then in 2019, the ringgit remained relatively stable, trading with 4.2 Malaysian ringgit, showing resilience despite global trade tension. Next in 2020, the pandemic caused significant volatility, with the ringgit weakening to around 4.3 Malaysian ringgit before gradually recovering toward the end of the year. In 2021, the ringgit weakened further, hovering between 4.2 Malaysian ringgit for most of the year. Then in 2022, the Malaysian ringgit disappeared significantly, with rate reaching 4.4 Malaysian ringgit. And last, for 2023, the Malaysian ringgit kept weakening and reached around 4.6. This shows that from 2018 to 2023, the Malaysian ringgit (MYR) generally had a strong exchange rate compared to the South African rand (ZAR). In other words, one MYR was worth more than ZAR over this period. For more information, you can refer to the exchange rate average article.
There are several factors that have impacted South Africa exchange rate. Firstly, political instability. Next is COVID-19 disruption. And lastly is economic instability. From 2018 to 2024, South Africa has faced political instability, including leadership change, a reduced ANC majority, the impact of COVID-19, civil unrest, and corruption. These issues has caused economic instability and reduced investor confidence. In a recent election, the African National Congress (ANC) come close to losing its parliamentary majority. Political uncertainty makes investors more cautious, leading to less capital flowing into the country. This increased volatility of the rand, and it's showing how political problem can cause economic instability and affect the currency value. The COVID-19 pandemic led to lockdowns that forced many businesses, especially in tourism, hospitality, and retail, to close or reduce operation. Many companies cut their workforce due to low demand and financial struggle. Low investor confidence means fewer investment, and the limited job opportunities contributed to the devaluation of the rand. In addition, government policies aim to boosting the economy, increase debt and inflation. This debt make it harder for the country to stabilize its exchange rate. Shifting commodity price and anti-domestic policies affect the rand because South Africa relies heavily on the natural resources. During time of instability, the rand often depreciate as capital leave the country and foreign investors decrease. Speculative trading and worsening economic conditions make the currency even weaker. Disruption in trade and investment increase the volatility of rand, harming investor confidence and slowing economic growth.
There have three impacts of exchange rate on South Africa. First, decrease in government financial. Besides that, increase in unemployment. Lastly, increase in inflation. First, the impact of the exchange rate on South Africa is decrease in government's financial. Political instability in South Africa has weakened the rand compared to the Malaysian ringgit. Political uncertainty lowers investor confidence and disrupts capital flows. Market reaction include decline in South Africa bonds and stocks, rising bond yield and higher debt insurance rate. Additionally, ministers have poor planning and implementation lead to inefficient use of resources, wasteful spending, and misallocation of funds. Besides that, increase in unemployment. The lockdown caused of people should stay at home and millions of workers were either furloughed or lost their job entirely, leading to a spike in unemployment rate. Many sectors was closed, especially in sectors like tourism, hospitality, retail, and manufacturing. For example, Cafe Caprice had to close their dine-in service due to lockdown restrictions and it did not need the waitress or employee. Lastly, increase in inflation. South Africa heavy dependence on natural resources significantly influenced the cost of imported goods, making them more expensive during inflation. For example, imported oil are pricey determined by global markets and influenced by United States. The rising cost of oil has direct impact on transportation costs. Oil is an input for food used by vehicles to across various sectors. A price of transportation more expensive, it costs price goods and service become increased.
Policies to address current issues related to exchange rate are fiscal policy and monetary policy. Fiscal policy refers to the use of government spending and taxation to influence a country's economy, while monetary policy refers to the actions taken by central bank to manage the supply of money and interest rates in an economy to stabilize the currency and promote economic growth. Contractionary fiscal policy can be used to solve political instability. The government of South Africa might show its commitment towards fiscal responsibility by managing public finances wisely, even during periods of political uncertainty. The government can also control fiscal responsibility through reducing budget deficits and public debt levels to increase the trust of investors. Next, monetary policy. Expansionary monetary policy is what South Africa been used to address the economic instability and disruptions caused by COVID-19. The South Africa Reserve Bank (SARB) uses inflation targeting to maintain consumer price inflation to stabilize the currency and protect the domestic consumer price. SARB also implemented the inflation targeting by setting a short-term policy rate that will affect the borrowing costs of the financial sector. Repurchase rate give a set to SARB such as government bond, and South Africa can later repurchase the asset at lower price. The SARB can also manage inflation and currency depreciation by restricting excess liquidity, potentially by selling government bonds or slowing the pace of fiscal easing measures during the pandemic.
As the conclusion, South Africa economy has shown resilience amid various challenges, including political instability, economic disruption from COVID-19, and structural issues such as power cuts and unemployment. Despite the rand depreciation and its impacts on inflation, particularly in rising food and fuel costs, the economy is expected to grow, with GDP projected to reach $373 billion in 2024. Inflation is forecast to moderate in coming years. And while exchange rate volatility has been significant over the past 5 years, South Africa economic outlooks remain cautiously optimistic with signs of stabilization.